But one stock which is really participating very well in that market exuberance is Zee Entertainment, higher by 5%, almost nudging the 190 mark. Well, the news coming from the agencies is that NCLAT has quashed the order asking NSE and BSE to re-look at the order which NCLT had given. Here, they have also nudged NCLT to hear both the sides once again. So, regarding the merger matter with Sony. And before they go across and give a nod, they should listen to both or have any objections, they should listen to both the sides once again. This is a very important development because, of course, the results also came out last evening, but more than results, Zee now is a stock which will move on watching the progress of how the merger with Sony is actually panning out. If there are impediments, then the stock will get hit. If there's a progress like the one which has happened now, the stock will get a nudge, and that is gaining by 5%. Before we get some lawyer voices, we have Abhay Agarawal. Abhay, I would urge you to, just stay with us. I want to take a view on Zee as well. Not exactly what has come right now, because that's a legal matter, but I want to understand from you, this is a hugely undervalued stock. Do you see it as hugely undervalued for a variety of reasons in the past? If any such move comes, which it takes this company closer to the merger or progress towards the merger with Sony, will market perception towards this company change?
Yeah, I think, Ajay, good afternoon to you and the viewers. I think in this Zee specific case, Ajay, what is happening is that we are in a market environment anyway where people are looking for opportunities to buy value stocks, at attractive valuation. So, and I think Zee fits in right there. And I think the good thing for the company is that a lot of recent announcements have gone in their favor. Like BCCI has also announced that they will postpone the bidding rights till the merger of Zee and Sony is clear. So they want Zee and Sony as a credible bidder in the broadcasting rights, which is a very positive news. And the news that you referred to is also a positive news. Plus, their online channels continue to do well. The business environment in India is anyway getting positive on the media side. And if you look at some of the media stocks, this is by far definitely a company that is undervalued on a comparative basis. So I'm not surprised, Ajay, that the stock is finding interest. And as it sees positive news flow, I think the stock will continue to get re-rated. That's my view.
Okay. Mr. H.P. Ranina will also join us in moments to give his reaction. Do we have Mr. Ranina on the phone line? Okay, we have him right now just to give his observation regarding what has come in. Mr. Ranina, thank you very much for taking this call right now. It is important to understand the NCLAT move of quashing the order, asking NSE, BSE to hear both the sides and relook before giving their order regarding the merger with Sony. How do you read this? This is a significant step. They are moving closer to the merger now. Are the probabilities rising?
Well, I think NCLT is just trying to get the inputs from BSE, NSE before they take a final call. So certainly it's a one step forward. But how long it will take will again, is a matter of the speculation, because most of the month of May and June, the NCLT does not function. Many of their members go on vacation. So really, this is just a manner of getting the time which NCLT will take. So NEC, BSE possibly will take another 4 to 5 weeks to give their order to the NCLT, and then the NCLT will decide, I think, possibly by the middle of July.
Okay, so you are saying that NCLT quashing the adverse order of NCLT and nudging them back that you should hear both the voices is actually getting them to, buy some more time and take a much more informed decision so that...
That's right.
Right, so mid of July, so we are talking about at least a 2-month period for which this issue has actually moved forward. But thank you, Mr. Raina, for helping us understand that matter. Okay, so NCLT has bought in some more time, and by mid of July, in Mr. Ranina's observation, is when this issue will come up once again. Getting back to Abhay. Abhay, market also, 18,500 is here. And the start of this series has been in the midst of a lot of kind of a concern on debt ceiling, whether IMD rainfall will come in time or not, all of that. But market is refusing to die down and moving ahead. What is powering this up move in your view?
No, but Ajay, you and I have been discussing this. I think even when the market was at 16,800, we had tried to do a sensible analysis of what is the reason that it is at 16,800 and not higher. And I think one of the reasons we saw that time, Ajay, was the lack of participation from investors, both foreign institutional investors and domestic investors. And since then, that has picked up. And I think that is what has brought the market to its all-time highs. And even now, Ajay, I would say that the ownership on the market is on the lower side. I would still say the market is under-owned because there is a lot of money that is sitting on the sidelines and looking for opportunities to come in. And getting to an all-time high, I think will be a very big technical move because that will be followed by momentum investors who will come in. So you're right, Ajay. I think the market seems to be right now discounting the risk of debt ceiling standoff continuing beyond June 1. And it also believes that, till it sees rainfalls being deficient, nobody wants to bet or start aligning the portfolios on the basis that the rainfall will be deficient. Overall, I would say earnings are supportive. The results have been on the positive side. We have seen analyst upgrades. We have seen money come in. So I think that's one of the reasons that we are where we are, Ajay. And I think it's a matter of time before new highs get taken out.
Abhay, well, that is one part of the story. The other part of the story is that quality mid-caps have started their move very meaningfully. You have looked at the automation space and manufacturing, electronic manufacturing, EMS space also very closely. Anything which you like there, which you have added to your portfolio? With, of course, the disclaimer that we're only discussing it for reference sake and example sake. It's not a buy-sell call.
Yeah, no, Ajay, thanks for that disclaimer. So any stock that I talk about are, it should be assumed that they are in our portfolio and, they're not calls to or recommendations to buy. So Ajay, Dixon has been in our portfolio, as you know, for many years, and we saw the performance continuously improve. We have seen the electronic export data come in very, very strong on the mobile handset, especially. It's crossed $1 billion a month. Which is heartening, from a situation not that far back when we were actually importing net importers of mobile phones to now exporting $1 billion worth of mobile phones. It's just remarkable. So that is where we see EMS, electronic manufacturing. We continue to see a lot of opportunities. We are evaluating some other companies. Unfortunately, there are not so many EMS players in the market, but I think that is a very attractive opportunity for investors. On the manufactured exports also, we are seeing bottom of the cycle textile exporters, companies like Gokaldas, SP Apparel, come in with very good quarterly results in a time when they were faced with probably the biggest challenges they have ever faced, both on demand slowdown and supply side price inflation. So I think that is another segment that is looking very interesting, Ajay. But overall, mid cap, small cap, we have been talking about it. I think it has underperformed the large indices over last 2.5 years, but now it's gearing up for a year of outperformance. That's my view.
I would urge you to stay back with us for a moment. We're getting some more reaction on this Zee Entertainment news. Karan Taurani is here with us, and Mr. Joshi is also here to analyze this matter and how it will take shape from here on. Market is reading this very positively. The stock is up by almost 6%. Karan, how do you see this news coming in? What do you make of the valuation of the stock right now? Okay, we'll go to Mr. Taurani in a minute, but Mr. Joshi is here. Mr. Joshi, how are you reading this news of NCLT quashing the adverse order of NCLT and nudging them to hear both the sides once again? Mr. Joshi, can you hear me? Mr. Joshi, can you hear me? Okay, I think there is some technical glitch there. We'll go to Mr. Joshi in a moment, but Karan is back with us. Karan, at 190 odd, what do you make of the valuations of this company with the way news is coming in? Is it a good time to accumulate over the next 12 to 24 months? Can it become an MNC valuation stock?
Yeah, so I think, from a valuation standpoint, things seem to be compelling. So what one here is that, we are building in about 55 to 60% upside over the near to medium term. This could happen in two phases. I think the immediate side of 10 to 15% over the near term could come, basis NCLT approval, and could be anywhere in the range of 4 to 6 weeks if there is a relief from the exchange and if they don't ask to return this entire approval process, which could have been time consuming in nature. So I think that's one, and I think the second leg of the re-rating in terms of valuation multiple could come in post the merger. What kind of strategy they announce and how do the synergies on the business pan out to be. So our broader understanding is that in terms of potential market share, they are almost on par, with the number one player, which is Star Disney on the linear TV side, and good execution on content, synergies on distribution, and some cost-cutting initiatives. You could arguably even see them, kind of beating, Star in terms of the overall viewership share or ad market share. So there's a very high likelihood that happening because there's no overlap in terms of their broader business that they do in terms of the genres that they have. And I think there's a big potential for regional market to actually scale up for them. So I think all seem well at these kind of valuations. And yeah.
Okay, Jinesh, Joshi or Prabhudas, Lilladher is also with us. Jinesh, did you look at the results this time around at Zee? A lot of them, people in the market are saying this was the kitchen sinking quarter, and with merger, which lies ahead, and books pricing in probably the worst, it would be a good time to get into the stock with a 24-month plus kind of horizon. Would you agree?
Pertaining to Sugar Box. But definitely from here on, with the overall ad environment improving, I think the recovery will be slightly back-ended and we may see margins improve in second half rather than first half. And also with respect to the implementation of NTO 3.2, we are likely to see some mid-single digit growth on the subscription side as well. So net-net, I think despite this quarter being weak, we will see recovery in the second half, and with now this merger issue also being put on the back burner, I think it is a good time to enter if you look at this asset from an 18 to 24 month standpoint.
All right, Jinesh and Karan, both of you, thanks for analyzing that for the stock market viewers and also from the shareholders' perspective. Abhay is still with us. Abhay, sorry for the a bit detour. Breaking news. Okay, let's talk about some of the areas of the market. Small cap banks. I see Catholic Syrian, South Indian as part of your portfolio. How did you see the quarterly earnings show this time round? Because both these names, along with some other, have actually gone through a corrective phase, and the numbers have not been very weak. Numbers came in pretty okay. Time to get back in. Are you holding your positions?
Yeah, absolutely. We are not only holding our position, we are happy to add to our position because we see them as structural stories for next 4 to 5 years, Ajay. And, anyways, the valuations that they are trading at gives a huge amount of comfort compared to their larger peers. I think there is a very solid credit demand environment from both retail and corporate that we are seeing. So the credit demand will continue to be very robust. And a lot of fintech companies we saw try to come in and take away part of that market, especially on the retail side. But they have failed, Ajay, because they do not have the regulatory presence. They're not blessed by RBI. Plus, they also do not have the physical branch banking advantage that the banks have. So I think, and also the banks have been very focused on improving their asset quality. So we are seeing write backs, the provisioning that was done in last 2 quarters, 3 quarters is now actually leading to write backs where there are net additions to, it's a negative provisioning in a way you can say, so the profitability is high. I thought South Indian Bank results were absolutely phenomenal. It gave a dividend after a long period of time. Catholic Syrian Bank is continuing to guide for a 15 to 20% growth in the book for next 3 to 4 years. So I think this is a pocket of the market that investors have still not looked at very closely, and which is the reason that there is still an opportunity for long-term investors to come in and look at some of these names.
All right, Abhay, we'll let you go on that one. Thanks so much for joining us on the show today. We'll have you back very soon.